Welcome, deep divers. Today, we're really plunging into a company that, well, let's be honest, it probably touches your life in dozens of ways every day. 3M.
Post-its, industrial tape, medical stuff. They're everywhere.
Exactly. Makers of everything from Post-it notes to, industrial adhesives, medical supplies, car care. A true industrial giant. But even giants, find themselves at a crossroads sometimes.
Navigating that legacy, right. Balancing the innovation history with, well, new challenges.
That's it, precisely. And our focus for this deep dive is 3M's Q2 2025 earnings report. We've got the earnings call highlights, key financials.
And crucially, insights from the Q&A with the CEO, William Brown, and the CFO, Anurag Maheshwari. That's often where you get the real flavor.
Absolutely. So our mission today, cut through the corporate speak, the numbers.
The jargon.
Yeah, the jargon. We want to pull out the most important bits so you can quickly get a handle on what's really happening at 3M, from their latest innovations to these ongoing legal things.
And what it all means for their future. It's kind of a story of surprising strengths versus some pretty big historical hurdles.
All right, let's unpack this then. Looking at Q2 earnings, the headline numbers, they seem pretty strong, don't they? What jumps out first?
Well, what's really interesting is the adjusted EPS earnings per share came in at $2.16. Now, that's up 12% year over year. And it definitely beat expectations.
Okay, better than expected.
Yeah. But for me, the bigger story might be the organic sales growth. 1.5% across all their business groups.
All of them.
All of them. And that's the third quarter in a row of positive growth. It signals maybe some real consistency, some momentum building up.
Yeah.
For a company that big, broad-based growth like that, it's genuinely impressive.
And the operating margins, I saw a big jump there too, up, 290 basis points year on year?
Yeah, quite substantial.
That's not small change.
Yeah.
So what's driving that kind of efficiency, especially when the global economy is still, a bit sluggish?
Right. It seems to be mainly driven by strong productivity improvements and some really tight cost controls. Looks like a concerted effort to streamline things. Plus, they reported really strong free cash flow, $1.3 billion. And get this, 110% conversion rate.
Wow, 110%. What does that actually mean in simple terms?
It basically shows great financial discipline. They're really good at turning their reported earnings directly into actual cash in the bank.
Right.
And that kind of cash position, it gives them flexibility.
Flexibility they probably need, given some of the other stuff we'll get into.
Exactly. Very crucial.
So with that financial muscle, where's the growth actually happening? Geographically?
Yeah.
And, across their different product areas? Because they do so much.
Good question. Geographically, China was up mid-single digits. The U.S. saw low single-digit growth. Europe was kind of flat.
Okay.
And then if you look at the specific business segments for Q2 organic growth, safety and industrial, that was up 2.6%. Transportation and electronics grew 1%. And the consumer side saw about 0.3% growth.
So fairly broad-based still, not just one runaway success carrying everything.
Exactly. Steady effort across most of their key markets.
And it sounds like they're using that financial health to reward shareholders, too. That can be a tricky balancing act sometimes.
Oh, definitely. They confirmed returning a substantial $3 billion to shareholders just in the first half of this year. Dividends and share buybacks combined.
$3 billion. Wow.
Yeah.
Some people might argue, given the legacy issues like PFAS, that maybe they should hold on to that cash.
Well, yeah, that's the debate, isn't it? But 3M's strategy here seems to be showing confidence in the core business, signaling financial strength while still investing. It's about balancing those shareholder returns with everything else they're juggling.
Okay, here's where it gets really interesting for me. When I saw those Q2 numbers, my first thought was, okay, what's really driving this? Is it just market stuff? Or something more fundamental? For 3M, innovation's always been key, right?
Absolutely. It has to be. And that's what we're seeing here, a combination of innovation and operational efficiency working together.
So what's new on the innovation front?
Well, one stat really jumped out. They launched 64 new products in Q2 alone.
64.
In one quarter.
Yeah, it's a 70% increase from last year, 70%. That points to a really active, healthy product pipeline.
That's impressive.
And the CEO, William Brown, he mentioned in the Q&A that their 5-year sales from products launched in the last 5 years were up 9% in the first half. They expect that to hit 15% for the full year.
So the new stuff is really starting to contribute.
Exactly. And the hope is these innovations will boost both growth and margins as they sort of stabilize in production. It's not just throwing stuff out there. It seems strategic. New solutions, better pricing power.
And the other side of that coin, Cost management. You mentioned productivity savings, $500 million. That's a huge number.
It is.
But for a company built on innovation, quality, is there a risk that cutting costs that aggressively, especially in areas like G&A, general admin stuff,
Yeah.
could it maybe stifle creativity or hit morale down the line? Where are they finding this operational upside, as they call it? That's always the concern, isn't it? Very fair question. So that $0.5 billion in productivity, it's roughly split between G&A and supply chain improvements.
Okay.
And both the CEO and CFO, they did highlight specific areas, things like reducing the costs associated with quality issues, better procurement savings, tighter cost controls generally, IT optimization.
IT optimization, okay.
Yeah, and managing indirect expenses. Now, the leadership, they're keen to frame this as strategic optimization, not just, slashing budgets blindly.
So smarter spending, not just less spending.
That's the idea, like using AI for IT optimization to streamline back office work, hoping to free up resources, not just cut into the R&D muscle. They'd argue it's a smart, comprehensive approach, not just draconian cuts.
Yeah, okay, so the Q2 numbers tell this positive story, resilience. But like you said, even giants face challenges.
Yeah.
Big ones. We need to shift focus now, look at the other side. The headwinds 3M is sailing into.
Right. You can't ignore the context.
Where are the shadows in this forecast?
Well, first off, the big picture. The macroeconomic environment. It's still pretty sluggish. Global indicators like the Industrial Production Index, IPI, and GDP growth, they just aren't showing much improvement.
And for a company like 3M, tied so closely to industry and consumers.
Exactly. It creates a difficult backdrop. It's not something they can easily control.
So which specific sectors are feeling that pinch the most right now? How's that affecting 3M?
The ones that stand out are automotive and consumer electronics. They're expected to face ongoing challenges in the second half of this year.
Why is that? Just slower demand?
Mostly slower demand, yeah, and some broader industry pressures affecting those markets globally. It's not solely a 3M issue, but they definitely feel those ripple effects across their portfolio.
And there are specific financial hits mentioned too, right? Beyond just a general slowdown, things that will directly impact the bottom line.
Yes, absolutely. They're anticipating a gross tariff impact of about $0.20 per share for the full year.
20 cents a share just from tariffs.
Yep. And that's going to hit margins, particularly in the second half. Also, something called stranded costs.
Stranded costs?
Yeah.
What are those exactly?
They're costs associated with businesses they've divested or operations they've shifted, but they still have to pay for them for a period. Those are expected to increase in the second half, too, which will also drag our profitability.
Okay. So tariffs and these stranded costs are definite drags.
Definite drags. And it's probably worth mentioning that analysis firms like GuruFocus have flagged some warning signs. I think 6 warning signs with 3M's stock symbol, MMM. Just something for investors to be aware of amidst the positive results.
Right. Context is key. And speaking of challenges, warning signs, we absolutely have to dig into the legal situation, particularly PFAS, the forever chemicals.
Yeah, you really can't talk about 3M right now without addressing PFAS.
It feels like more than just a financial issue. It's almost fundamental, touching their legacy, their reputation.
It really does raise that important question, doesn't it, about managing these huge historical liabilities. The sheer scale of the PFAS litigation is, well, immense. They're facing over 30 state attorney general cases still pending.
30 states.
Yeah.
Plus individual lawsuits.
Exactly. Plus numerous personal injury suits. It's complex, it's long-running, and the impact goes way beyond just the financial settlements. It's reputation, future strategy, the whole package.
Has there been any recent movement, any specific settlements that give us a clue about how they're tackling this monster problem?
Yes, actually. They did recently reach a settlement with New Jersey. It covers site-specific issues and some statewide claims, too.
Okay, a settlement, is it a lump sum?
No, and this is key. The payments are spread out over 25 years.
25 years. Wow, that highlights just how long-term these things are.
Absolutely. And the CEO, William Brown, he reiterated their commitment to managing these issues while, crucially, maintaining that cash flexibility we talked about earlier.
Right, that strong free cash flow gives them breathing room.
Exactly. Breathing room to handle these settlements without, crippling the core business or killing off innovation funding. It's a balancing act.
And what about PFAS manufacturing itself? Are they still making these chemicals, or is there a bigger shift happening?
No, this is a really significant strategic shift. 3M confirmed they are exiting all PFAS manufacturing by the end of this year.
All of it, globally.
That's the plan. By year end. It's a very clear, definitive response to these mounting liabilities. It's a move to reshape their portfolio away from these chemicals entirely.
That's a massive pivot. It'll definitely change parts of their business.
Undoubtedly, it redefines certain aspects, for sure.
So, okay, let's bring it all together. We've got strong Q2 performance, innovation, efficiency, but also these macro headwinds, tariffs, stranded costs, and the huge PFAS cloud. What does this all mean looking ahead? What are their expectations for the rest of the year?
Well, synthesizing the outlook, they've actually increased their updated EPS guidance for the full year. The new range is $7.75 to $8 per share.
Increased guidance, even with the headwinds.
Yep. And they also expect that free cash flow conversion rate to stay higher than 100% for the full year. So that suggests continued strong cash generation and confidence they can keep operations efficient enough to produce that cash.
Okay. And what about, more specifically, the second half, organic growth, margins? What are the projections there?
So the CFO, Anurag Maheshwari, he expects organic growth to be around 2.5% in the second half. Pretty similar rates expected for both Q3 and Q4.
2.5% growth.
Steady.
Steady, yeah.
Yeah.
And margins. They're projected to be around 22.5% in the second half. Now, that will be impacted by those tariffs and stranded costs we mentioned, plus some increased investments they're planning.
Right. So margins might dip a bit from Q2 levels.
Compared to Q2, maybe slightly, but they still expect year-over-year improvement in margins for the second half. So the underlying trend is still expected to be positive, just with those specific financial drags factored in.
Well, there you have it. Our deep dive into 3M's Q2 2025 really shows a company navigating a very complex landscape, doesn't it?
Absolutely. It's a real mix. They're getting solid growth from innovation, from efficiency, which is great to see, speaks to that core strength. But man, they are also grappling with some significant legacy challenges, especially PFAS, plus those wider economic headwinds.
It really underscores that understanding a company like this means looking at both sides. The wins and the struggles, the triumphs and the trials, it's all part of the picture.
And the delicate balance they're trying to strike between them all.
Yeah, and it does raise an important question, I think. A company like 3M, with its incredible reach, its long history, it's just a fascinating case study in corporate resilience, adaptation. It's not just about the numbers on a spreadsheet. It's about how these industrial giants evolve, how they redefine themselves when facing these profound historical environmental shifts.
So here's a thought to leave you with. As 3M walks away from PFAS manufacturing, as they push for new growth through this next wave of innovation, what's the long-term impact going to be on its identity? As this iconic industrial giant?
Good question. How does it change who they are?
Exactly. And maybe more broadly, what can other big established companies learn from how 3M is trying to manage its past, these historical issues, while still driving hard towards the future through innovation? Something to chew on until our next deep dive.